Okay, great. Thank you everyone for joining us this evening. Super excited to introduce to you the Bharosa Club offering and tell you a little bit about what we're about here. So Bharosa Club's mission is quite simply to help you get paisa vasool when you're buying financial services products. So this begs a question that why are people not getting paisa vasool, or are they not getting paisa vasool in financial products? And to our mind, it's pretty clear that they're not. When you look at the data, it's abundantly clear that people could be doing a lot better than they are. And it's not the customer's fault. It's actually a symptom of the marketplace. And the best way to sort of understand the dichotomy between financial products and the rest of the world is to just take an example. So when you buy, let's say, a television is a very complicated product, right? There are tons of different features. It's an expensive product, but you have an intuitive feel of how to buy that. You know the price and you know the picture quality, and even you can do some research around the features and select the right TV for you. And then when that TV comes home, you can say, am I happy with this TV or not? Am I going to buy from this brand again or not? But you can't do that with financial products, or at least you haven't been able to do it with financial products until now. And why is that the case? Because when you buy something like, let's take a mutual fund as an example, the fee is hidden from you. You don't take your wallet out to pay the fee, right? So you don't even know how much you're paying. And furthermore, you don't know the vasool that you're getting. Why don't you know the vasool that you're getting? Because the vasool is also very hard to measure. It depends on so many different factors, including when you entered the market, what asset class you entered into, whether it was a large cap, mid cap, small cap fund. You need to have the answers to all of these questions to really know if you're getting vasool in your mutual funds or not. It's something that has not been possible to do because there's so much work that needs to be done to track this until the advent of technology. And that's what really has prodded on us in this mission. At Bharosa Club, we're trying to use technology to help you improve your decision-making with your personal finances. That's really what drives us. And today we are starting with mutual funds, but our plan is in the not so distant future, we would want to expand to loans, insurance, and other financial products as well, because they suffer from some of the same issues. And the funny thing is, it is much more important to get paisa vasool in your financial products than it is to get paisa vasool on your TV. Because if you get a good deal on your TV, that's a one-off good deal. But when you get a good deal on your financial products, it's a gift that keeps giving because of the power of compounding. If you save even 50 basis points year after year after year after year, it means you can attain financial independence sooner. So that is really the carrot at the end of the stick here, and why I'm so delighted that you guys joined the call. It really warrants everybody's attention. And we think with our offering that you can do that. And so I want to also put 1 second on a fact that I think is very important for everyone to understand. And that is, what is in it for Bharosa Club, right? Anytime you're sort of trusting anyone in financial services, you should understand the motivations of the party that you're basically gonna use, right? And so essentially for Bharosa Club, we are upfront about where we make our money. We have a pricing fee that's very low. We're gonna charge 1,000 rupees as an introductory price point for people with portfolios above 5 lakhs. For people below 5 lakhs, it's gonna be free. Why? Because we want this technology to be accessible to everybody. And we're confident that people who have portfolios below 5 lakhs will soon cross 5 lakhs once they start using the tech to make better investing decisions. So that's really what's in it for us. And that's a very important thing for you guys to internalize, because it will free you of concerns that essentially we have biases and that we're promoting products because we're getting a fee from a manufacturer or something like that. We're not. All of our revenue comes from member fees, and that's it. So with that, I want to now focus on what the potential is of our technology. So what I'm going to do here, one of our members has kindly agreed to let us use his account as a demo account. We've masked all his personal information. And I want to show you, he joined us as a beta user and helped us actually develop the technology. And I want to show you what kind of change is possible by using our tools. So I'm just going to share the screen really quickly. And I'm just going to turn on the mouse highlighter so that you'll be able to follow the mouse. Okay, so can Anita, is the screen being shared and the mouse is highlighted?
Yes.
Okay, great. So this is this person's portfolio. And if we go down, we can see something very interesting. So the dotted line is when they started using our technology. So about September 2020 is when they started up with Bharosa. And what you can see here is the paisa that they've been paying their mutual funds as a percentage of their total portfolio value. So you can see that they were paying almost 1.6% of their portfolio was going away in fees every year, year after year after year. And after using Bharosa's technology, they were able to rationalize their portfolio and see a dramatic reduction in the fees that they were paying. And like I said, this is the gift that keeps giving. You know, when you achieve this change with your portfolio, you save these fees year after year after year. And these fees also scale with your portfolio. So as your portfolio goes larger, the fees become more and more important. So this is a huge change that that person experienced in their fees. And they've got it down to, you know, about 30 basis points, which is a terrific expense ratio for an overall portfolio. Then when we go down a little bit more and we look at how that person's Vasool has changed. So here, I just want to spend a moment to say, how do we measure Vasool? What we're doing here is comparing that person's portfolio to the overall market, adjusted for all of their decision-making, adjusted for when they decided to invest in the market, when they decided to pull out of the market, what assets they decided to buy, all of that is factored in. So what this is really isolating is, did their funds perform for them? It takes away any other confounding variables. So we're able to really isolate the impact of their fund selection. So you can see again that starting in 2020, they really saw a big improvement in fees. And now they're hovering between almost being green, which is meeting the market or slightly exceeding the market. So again, they've seen a huge improvement in their portfolio in terms of performance. And this has all been done by themselves. The Bharosa tools are just tools that are used by people to help them make better decisions for themselves. And that's the most powerful thing about what we're trying to do. We're trying to empower you to improve your decision making rather than relying on advisors or so on and so forth. So that gives you at a high level what the potential is to really improve the wealth creation of you and your family by using our product. The next thing I want to do is give you a little tour of the product's features and some of the more powerful things that you can do with it. So the first feature is something that's useful for both new and existing mutual fund customers. It's called our Add Money Playground. So I'm just going to click in and bring up the playground. Oops. Let me take off the spotlight and see if it will click in here. Hey, Ujjwal, is there a way to go directly to the URL? The mouse is not registering. Hello?
Try now. I think your spotlight's gone.
Ah, okay, still not.
Just go to the group ID/investment plans.
It is going to that URL. Yes, it's loading maybe. And this is Murphy's Law. When you're actually doing a demonstration, you run into these glitches, but usually this is instant. Not sure what is going on. Ujjwal, you want to see if you can bring it up on your computer? Maybe it's the internet connection on my end.
Sure, just a second.
Yeah.
You may want to stop sharing and reshare the screen.
Okay, I've stopped. Okay, now it's loaded for me. I'm going to start it again. Let me start it. Yeah. Okay. Okay, so the investment playground is basically designed to help our members answer one of the most fundamental questions of investing, which is, okay, I have this money, but where do I put this money? Because it's a really daunting question. There's so many different kinds of categories of funds and so many different types of schemes. And how do you pick where to put the money? So the Bharosa team put our minds together and basically tried to create a framework that would help people answer this question to make sure they get paisa vasool for their new money investments, right? And this is a starting point. It's a playground. In no way, shape, or form are we saying like this is the be all end all and this is where your money should go. No, we're saying that this is a great starting point for you to design your own investment plans and a very good framework for you to do it. So the framework that we use here is something called holding power. So what does that mean? So that means that when you have a new investment to make, one of the central questions is how long can you put that money in the market? Right? It's like with an FD. If you invest your money in an FD for 1 year, you get a certain rate. If you invest your money for a longer period, you get a higher rate. The same principle applies to mutual funds in a slightly different way. While the rate is not fixed, when you're able to hold your money longer in the market, it opens up options that pay a higher rate of return on average to you. So one of the central questions that you have to answer when you're putting in new money into the market is, how long can I hold my money? And that's what the playground helps you answer, like to design a custom investment plan for you. So let's take an example here of an actual member. This is an actual case study of a member that used the plan. So the person got a 5 lakh windfall and wanted to invest it. And their initial inclination was to put it all in equity. Now, equity is something that we consider to be appropriate only for long-term money. So if you can hold your money for 7 years or more. So this person said, you know what, I'm a risk taker, so I'm going to put my money in equity. Okay. So we said, okay, but you should try out the playground and just see, the feature. They said, okay, so they tried it out and they actually put 5 lakhs in, right? So I'm putting 5 lakhs here into the over 7 years bucket. 1 second, I'm just going to turn on that spotlight again. Over here into the 7 years bucket. So if I put in 5 lakhs, okay, then I can see some statistics that populate in the center here of the playground, right? So I can see that 5 lakhs, the center number here tells me what it turns into in an average case. Now, how do we determine this? We actually looked at 15 years worth of historical data and we analyzed what the average CAGR would have been if you did an investment over that period, right? So that's what the central number shows here. Down here on the left, you see the absolute worst it could have gotten over that period. And over here on the right, you see the absolute best if you were the luckiest in the world, because no one knows what the future is going to be, right? So this will give you a sense of how it would behave under a variety of different scenarios. So this person put in the 5 lakhs and they said, you know what, this looks really good. In an average case, my 5 lakhs is going to turn into 9 lakhs. In a really good case, I'll almost triple my money. And in an absolute downside case, I'll just take a small little haircut. I'll lose 12,000 rupees. Not a big deal, right? But then the person remembered that they actually need some of that money in a 1-year time frame. So what they did then is they shifted the slider to 1 year. And then they saw why they couldn't invest everything in equity. Because when you look at a 1-year time frame, actually that 7-year money, there's a reason it's categorized as 7 years in Bharosa's system. It's because if you're only prepared to hold that for 1 year, you can be very unlucky, right? How bad could it get? That person looked at that number and said, wow, I could lose up to 60% of my investment if I get really unlucky and invest at a bad time in the market, right? So the playground is very useful for you to get an understanding of how your investment choices depend on your downside, upside, and average case expectations. So you can play around with this and put money in different buckets to get a sense of what the right investment profile would be for your needs. So this person actually decided they were going to put 4 lakhs into the 7-year bucket, and they were going to put 1 lakh into the emergency bucket, because that's money that they want to access within a year. And when they were done, they just clicked add investments. They named their plan. They called it dummy. Let's just call it dummy plan for now. And once they do that, they get a list of funds that could fit in this category and amounts to invest behind it. Now, again, this is just a starting point, right? These are funds that we consider to be paisa vasool based on our analytics. They are low cost and they are index funds. So you're not taking much risk other than market risk. So we like these, other than the debt funds, which are also broad debt funds. They're not targeted sector-based debt funds. So that's essentially how the playground works. It gives you a starting point for how to think about investing new money, knowing that someone's got your back and is auditing, has vetted this to some extent, right? So that you know that you're not going to go way off the rails, right? So the next feature I'm going to show now is more around what we have to offer for existing mutual fund users. And hopefully our new mutual fund users will soon become existing mutual fund users, because we think it's a terrific product to start with in terms of managing your wealth. So, okay, so this is the page that we spent a little bit of time on before, but now let's go through it in a little more detail to understand how our beta customer improved his portfolio so dramatically. So the first thing that I want to call your attention to is something called Paisa Vasool Insights. So essentially what Bharosa's technology does here is, on a real-time basis, updated every single day, we analyze your portfolio and the funds that you hold, and we check them against their respective benchmarks. And what do I mean by this? Well, every fund by law in their offering memorandum has to disclose what benchmark or benchmarks they are trying to meet or beat. And that's essentially what their business is. They charge you a fee, and in return for that fee, they say, we're going to meet or beat this benchmark, right? Now, nobody checks them on this until us. So we are actually checking them. Did you meet or beat the benchmark that you said you were going to meet or beat with this member's portfolio? And if you didn't, then our analytics kick into gear and we say, hey, this fund did not deliver paisa vasool for you. Let's check if it makes sense for you to consider exiting it. So what our analytics do is we analyze what the tax you'd pay is if you exited it, and how long it would take you to recover that tax based on if the past returns were consistent with the future returns. So it gives you a very good starting point in basically flagging for you underperforming funds that can help you migrate your portfolio to a healthier portfolio. So that's a lot of what drove that improvement in that customer's portfolio, is getting out of these underperforming funds into healthier funds that perform for him. The second chart shows you, again, on a real-time basis, how you're doing versus the market, right? So the first column is you. How much have you gained over the past year, 3 years, 5 years? That's great. But we need to put that in context of the market, right? To understand, is that doing well or badly, or is that bad, right? So the market is shown here, and then your vasool is defined as simply A minus B, you minus the market. So if it's a negative number, then you've trailed the market. If it's a positive number, then you have actually done better than the market. So you can see this person started off doing worse, but over the past 3 years and 1 year, they've dramatically improved their performance. So that is how their portfolio is improving over time. We've already gone through this PESA page, that's PESA chart, but this will help you see in real time how your portfolio is benefiting from the changes you're making and seeing if that's actually paying off or not. Same thing here with the vasool chart. You'll be able to see that in real time. And then we have really handy, very easy to understand data that enables you to understand how your portfolio value is changing. This will help you improve your wealth creation by figuring out, are you taking money out of your portfolio or putting money in, and making sure you're hitting your savings target. So you can choose any year period. So you can see for this is showing for the past year. This member has taken out money from their mutual fund portfolio, right? So they're not actually investing more, they're taking money out. And then this section, the holding power section, is extremely powerful. This gets back to the concept we were talking about at the in the Ad Money playground. This basically looks at your portfolio and it figures out, based on your holdings, how does that translate to what it's saying about your holding power of your portfolio. So for example, this person has 5 lakhs invested in their emergency bucket type of investments. Now that may be just right for the person, or maybe the person looks at that and says, I don't need 5 lakhs in my emergency bucket. I already have 10 lakhs sitting in my savings account, so I don't need 5 lakhs here. So this allows you to optimize your allocation of your investments so you can earn a better return going forward. So if that person says, I don't need 5 lakhs in emergency, I can move that money into equity, they'll earn dramatically better returns on that 5 lakhs over the long run. Then the next section is very powerful also. It tells you how much you're paying in fees and to whom. So there may be fees that you're paying without knowing to the mutual fund companies how much you're paying. Now you'll know I'm paying 10,000 rupees a year. And this person's brought that fee number down dramatically, right? And you'll also know if you're paying it to any advisors, right? So a lot of times advisors will charge hidden commissions, and you will be able to see exactly how much you're paying to them and figure out if they're paisa vasool for you or not, right? And the last section here on Monitor, which is very useful, is a running estimate, again, real-time estimate of your tax bill. So anytime you make a sale or a redemption, you will have this tax calculation updated. So you won't be surprised come April when you're preparing your taxes in terms of how much you owe in taxes. So that's kind of a very high-level view of what the Monitor page offers. There's lots of detail within this for people that want to peel the onion and really dig in. So for example, you could click view details here and see for every single fund that you hold, how it's doing versus its benchmark, right? So you can dig into this level of detail if you want. And this is really for power users. I mean, if you're a casual user, you can rely on paisa vasool insights to alert you when our algorithms identify it. But for the power user, they can actually dig into the details and maybe disagree with our algorithms and say, hey, I know you guys didn't flag this fund, but I think I actually should get out of this fund, right? So that's kind of a very high level overview of the Monitor tool. So with that, I'm going to open it up for Q&A. So Anita, you want to go through the questions?
Yes. So the first question that came in, just 1 second. Okay. Why did you start with mutual funds?
Sure. So as a paisa vasool oriented club that's focused on getting its members paisa vasool, it was very important for us to pick a product that we believed was paisa vasool. And in our opinion, mutual funds are the single best investment option for 95% of people, if not more. And the reason for that is that you get diversification for free. You get also, and what I mean by that is when you buy a mutual fund, the fund manager himself, if you're buying a, not a sector-based fund or something, they're already doing the diversification for you. So you don't have to stress about, am I in, taking too much sector risk or not? When you're buying stocks, you could be taking all kinds of hidden sector risk that you're not even aware of, and correlations that you're not aware of. So for example, you could be in financial services, in banks and NBFCs in your stock portfolio and not realize that they're very highly correlated together, right? Even though they're technically in different sectors, they're extremely similar business models, right? So that's one reason. And then the second reason is that mutual funds allow you to get in and out of stocks without triggering tax events, right? So the mutual fund manager is able to buy and sell stocks and not trigger capital gains for you in a way that if you were doing the same thing with stocks, you would be paying taxes. So, and then also you have a very good regulatory environment in mutual funds, versus something like, say, a small case, which does, similar stuff to mutual funds, but you don't have the regulatory backing of a SEBI that is essentially ensuring that the funds are conforming to certain categories. So for all those reasons, we really liked mutual funds. And the other thing that shocked us was that the mutual fund penetration in India is only 3%. To give you context, that's 50% in the US. So we think mutual funds have a long way to go in terms of getting people paisa vasool in India, and we want to be part of helping people find them and find value in them.
Tell us about your team and their backgrounds.
Sure. So our team is, we're all super passionate about preventing bad selling. We come from a variety of backgrounds. So the company was actually started by my parents, Anita and Sanjay Bhargav. They are still very much involved. Anita is the head of member growth, and Sanjay is the executive chairman of Bharosa Club. And they started Bharosa Club in, help me out, guys, 2016,
2015, yeah.
2015, as a passion project to help people stop bad selling. The other two people on the team are myself and Ujjwal. Ujjwal and I really joined hands in 2 years ago to take Bharosa to the next level, from being just a passion project to being a full-fledged, business that we're trying to scale and get to be really big. So we've been working hard on the technology that you see in front of you for the past 2 years. My background is I've been working in financial services my entire career, at most notably one of the largest private equity funds in the world. It's called Apollo Global Management. I also worked at a long-short public equities fund and an investment bank prior to that. And Ujjwal is a techie through and through. Right out of college, he reported to the CEO of Disney's India unit directly. And he's been an open source contributor to some of the most notable open source projects, including Ruby on Rails. So he's a techie through and through. And then Anita and Sanjay have a financial services background as well. They were on the founding team of PayPal, which is a US payments company. Prior to that, Sanjay was a longtime Citi banker, spent 21 years in Citibank, and led some of their most successful products in India. So, so we're all sort of committed to working together to fix this bad selling issue in finance.
All right, the next question is, I'm not comfortable doing mutual funds without my advisor. How can I use Bharosa while still using my advisor?
Yeah, that's a great question. So, the nice thing about the tools that we have is they can be used in a variety of different manners, right? So one is, our hope is that all members eventually will feel confident managing their own mutual fund portfolios, because we think with this tech, anyone can do it. It'll take some time though, and so we recognize that. So for example, for someone that wants to gradually transition towards that, a really good way to sort of do it is to use Bharosa's tech to help them ask the right questions to their advisor, right? So they're going to be much more informed now. They're going to realize which funds are not performing. They're going to you can talk to the advisor and say, I looked at the data and this and this fund are not performing for me. Can we look at alternatives? You can look at the fees you're paying your advisor and say, hey, I've looked at the numbers and I'm paying you a lot of money. Like, I would like to reduce this amount. Can we look at reducing the fees I'm paying, please? Right? So you'll have a lot more data at your disposal to question your advisor, and questioning is very good, right? And gradually over time, my suspicion is that with using this tech, you're going to realize it's not that hard and eventually feel comfortable managing your own portfolio.
The next question is, can I transact on Bharosa Club?
You cannot transact on Bharosa Club as of now. And the reason for that is we want to focus on building world-class tools and there are already people out there in the marketplace that offer great platforms for transacting. And unless we think we can do it better than someone else, we don't really want to focus much attention on it. So we're focusing on giving you the tools to analyze your portfolio, and then you're free to transact at wherever you want. There, for example, Grow, Zerodha, MFU, MF Central. These are all good options for transacting on mutual funds. Although there is a possibility that we will be able to integrate single-click execution on our site as a convenience, but that will be a few months down the line if we're able to do it.
Okay, the next question is a very interesting question. Does the holding power concept apply to stocks also?
A very good question. No, it doesn't. And the reason why is that when you are talking about diversified index funds, there's almost, there's zero risk that the Nifty 100 goes to zero, because that would mean every company in the Nifty 100 goes bankrupt, right? And you've taken so much diversification into account that you eliminate that risk of complete wipeout. So in general, index funds tend to behave well over longer periods of time. When you're talking about a specific stock, even the biggest stock can go bankrupt. Like even a Reliance can run into trouble, if they over leverage themselves. Like as Adani shows us, like you don't know necessarily what the prospects are for an individual stock unless you've done serious amounts of homework, and then even then you can get a lot wrong, right? So you have to be very careful with stocks, and the holding power concept does not apply for that. You cannot just assume that if I'm willing to hold a single stock for 7 years that I'm safe, right? You could pick the wrong stock. You could have picked DHFL, for example, and that went to zero, right? So you have to be very, very careful with stock investing, which is why I think stock investing is not right for most people. And I did this professionally, stock investing, for a long time. I know how hard it is. And what the risks involved are.
Okay, the next question is, how is the product different from Scriptbox, Grow, IndMoney? There's plenty narrated here, but how is it different from the rest of them?
So I think it's different in a lot of ways. So some of the products that you referred to, the first question I would ask is, how do they make money, right? Because if they do not charge you and you don't know where they're making money, then the tools that they're giving you and the data that you're giving you, you have to ask the question, is there a bias? Okay, and so a good example, I don't want to talk about specific competitors and platforms and all these things, but are they putting you in commission paying funds, for example, right? So some of the companies you mentioned there would be, right? And the other thing I would say is that we think our technology is not just the best in India, but the best in the world. And I don't mean to say that to brag or anything. I sincerely believe that. And the accuracy and validity of it is, we put so much attention on it that it gives you insights that we don't think any other platform in the entire world can give you. I don't think you will see a Vasool calculation like we do anywhere else. Even the US companies and brokerage firms do not do this calculation because it's very, very hard to do.
The next question is, how often should one review one's portfolio and make changes, as the time to market is very difficult and even experts fail here?
So, I would say that it's okay to review your, portfolio frequently. I would say review frequently and act infrequently. It's good to, keep tabs on it. And the good news is, with platforms like Bharosa, it's not very hard to review your portfolio, right? You can trust that the tools are going to alert you to weird things that you need to look at, and you can make it a fun activity, right? And just reviewing, and then when there's something to look at, not being too trigger happy, but really taking your time and studying things and thinking it through before just acting. There's no race here. The important thing is to make good decisions, not quick decisions.
The next question is, do you recommend only index funds or active funds as well by your algorithm?
Yeah, so this is a really good question. So I would say that, for the bulk of your portfolio, we recommend index funds because index funds are low cost. They're going to track the market, and data shows pretty conclusively that if you pursue that strategy for the bulk of your portfolio, you will actually do better than most investors. The data shows pretty conclusively. There's a report that's released that shows that 90% of active funds fail to beat their benchmarks, right? Which is why this technology is so valuable. It helps you keep track of these active funds, right? So using that principle in mind, I would say that we would be fans more of index funds, but active funds have their place. And if you have a particular view that you feel you can express through an active fund, then by all means do it. There are examples of active funds that have done fantastically well. And they warrant a look. And actually, we will be building some features into the site in the future that will help people look for good active funds, as well as good index funds. It's going to be called Explore Funds. It'll help you get a sanity check on a mutual fund that you want to study.
Okay, the next question is about the Paisa Vasool insights.
Mhm.
And it's really referring to the miss and hit of the funds versus the benchmark. But, it's talking about how if a fund underperforms in a quarter or a year, they may actually turn around. So
Yep.
I think you may want to explain a little bit to Prashant and others of how the Paisa Vasool insights are actually given.
Yeah, and this is a great question, Prashant. Thank you for asking it. So you'll notice on our Paisa Vasool insights, there's a big ignore button here. And that's a very conscious call that the team took, because what you're saying is absolutely right. Bharosa Club does not have a crystal ball. We cannot tell you if the fund is going to dramatically improve in the future or not, right? That's beyond the capabilities of, frankly, anybody. Because if they could do that, then the stock market would be very easy to make money. Mutual funds would be very easy to make money, right? But what we can do is tell you, hey, this warrants a look because this fund has really not performed for you in the past. Then you need to do the calculation in your mind, right? Given this alert of, do I think this fund is having a bad stretch and they will improve in the future? Or do I think, like, look, I don't know if this fund's going to improve or not. And given how they've done in the past, I'm just going to assume that they're going to do that in the future, right? So if you have a reason to believe that performance will turn around, by all means, click ignore on this button, right? But to also give you a little bit of insight into how our algorithm works, we do not actually count a fund for this analytics unless you've held it for over 1 year. So it already takes out of the bag funds that just had a bad quarter. The funds that fall into this bucket have at least had 1 year of bad performance. So that's another way that we've thought about the issue that you're talking about. But it's a really, really good question.
Yeah, and also then we do look at the 5-year performance and how it performs compared to the bundles, etc. And we also look at the capital gains that you would incur. So it's a pretty complicated algorithm that goes into the Paisa Vasool insights. I actually missed one question. How do you select equity?
How do you select equity means?
Yeah, that's the question. So we don't really select equity. But I think maybe this is related to the equity mutual funds. I'm not sure.
Maybe ask the questioner to clarify a little bit.
Yogendra, do you want to unmute yourself and ask clarify the question?
Why don't we move to the next question?
Okay.
You can update the chat if.
Okay. Can you explain the membership structure for a family? I have 6 members of my family investing in MFs.
Yeah, so this is a good question. So, our initial pricing strategy structure, it's an introductory pricing structure. So this is not probably going to be the pricing structure in the long run, but for people that join early, they're going to have what we think is very attractive pricing. So again, everything is done on a AUM basis. If your AUM on a PAN level is below 5 lakhs, it's totally free. There's no charge. But if your AUM eventually crosses 5 lakhs, we'll start charging you then, right? And essentially it's 1,000 rupees per PAN that has an AUM above 5 lakhs. I'm going to ask my team to just make sure that I didn't misstate anything there. Any mistakes I made, guys?
No, under 5 lakhs are free, and everyone gets a 3-month free trial.
Yes, everyone gets a 3-month free trial.
Yeah, I would just add this, that, the best way to see, is this better than money or Scriptbox or anything that you like, is that you should come join, play around with this for 3 months for free, and then decide which one is right for you. Right? And then this fee, the 1,000 rupees, is for a year, right? So,
Yeah.
it's a very low fee. I am actually, as the executive chairman, I don't think this price will last for very long. So what we had suggested that to the team was that the first 1,000 people who pay this, okay, they would be grandfathered for life because they've taken an early decision. But after that, we probably are going to increase this price. We may, right? In there, because
Yeah, but I would say in general, yeah, good clarification there. But in general, our model is that we want to be low cost because we want to charge for the reasons I mentioned earlier. I think it's really good to know where your company is making money. And that's for that reason we want to charge. But our goal is to become big. And we know that we can do a lot more if we become big. That's why we want to get big. But we know we can only get big if we have attractive pricing also. So we don't want price to be the reason you don't join. We want, if you don't like our product or whatever, then fine, don't join. But if you like our product, we want you to be able to join. That's kind of the thinking around pricing. Although we think that 1,000 rupee for an annual price per PAN is very attractive and given the amount of value we deliver. So that's what Sanjay was saying, that he doesn't think that pricing will last. I think he's right. At some point, we'll probably raise the pricing. But for people that join early, they'll be grandfathered. They'll always have that 1,000 rupee price.
There's another question. For someone who's using this platform for the first time, can you guide us as to how they can invest through this platform? So let me just answer that. Currently, you cannot invest through this platform. In fact, for new to mutual fund investors, we actually recommend that they try out Grow, Zerodha, MFU, MF Central, whichever one they like. So we've made it very easy. And we keep trying to improve this, which is import your portfolio so that you can get the analytics from our platform and invest from any platform of your choice.
Yeah, we know that it's a little inconvenient, right? And let me explain the reasoning behind this. See, we're a really small team, right? We're 4 people. And that's it. All the tech that you see is built in-house. We're not outsourcing anything. And, that has advantages because we're able to deliver very, very high quality stuff. And, if there's a bug, the bug is our fault. And, we know exactly what's going on. And so it has advantages, but the disadvantage is we cannot do everything, right? And so we have to make conscious calls about what we focus on and what we don't. And so the team took a very conscious call and said that, look, we think we have the best analytics in the world. We don't think that we have the best transaction capabilities in the world. And we know it's a little inconvenient for the customer, but hopefully investing our efforts behind the analytics is more valuable than giving them a way to transact also.
Someone's asked this question: what is the track record of Bharosa Club performance versus Deserve, who has experts from the industry?
Yeah, so it's a very different model. So Deserve, from my understanding, I'm not super familiar with them, but from my understanding, Deserve actually gives you advice. We don't give you advice. Bharosa Club is not giving you advice saying buy this, buy these funds, don't buy these funds. Bharosa Club is giving you insights, right? Insights that make it easy for you to act and make the decisions yourself. Right. So I would say that our track record is very good in terms of the beta customers that we've worked with. I would say we have a really good track record of adding value to them. So I showed you one example today, but there are other examples that are equally impressive of dramatic improvements in the person's portfolio, not because we told them what to do, but because we presented data in a way that was so easy for them to understand that it helped them make the right decisions for themselves.
Okay, so there's a question on the further development plans. Is there an app under development and stuff? Maybe we will eventually get to an app, but for now we really have our hands full because we're really looking at, we're looking at explore and redeem functionality for mutual funds. And then we will probably add stocks. And then we want to move on to loans, etc. So we want to do the same kind of thing for all these products. So, we will keep our members posted on whatever the new development coming soon is.
So what I would say, just add on to that, is that we're very cognizant that most of our members use us on a phone, right? So we've done our best to make the app very mobile friendly. And to that extent, if there are ever any issues that a member runs into on using it on a mobile phone, please do email us at support, because there's so many different phone form factors and all that we can't possibly test every single one. But please know that if you're running into some sort of issue on a mobile, we will fix it. Just email us at support@bharosaclub.com. The plan is to have a native app at some point, but that actually runs on the phone. But like Anita said, it's not terribly high on our list of items right now. So I would say that you're looking at maybe 6-7 months down the line.
Okay, so someone asked a question for the existing members, what is the fee? So if you are an old audit member who had made a payment to us, we are taking you forward till 2024. If you're a new member,
yeah,
then,
and just to clarify to people. So when I say that we had old beta customers, what I'm talking about is that this audit product that Anita is talking about, these were beta customers that tried our beta product, which was a one-off audit. And like she's saying, go ahead, why don't you finish?
Yeah. So they had made a payment of 1,000 rupees. They're being carried forward for another year because, in fact, it was from them that we had a lot of learnings and we have improved and simplified this site. So we'd like to acknowledge their contribution to this and give them a membership for the coming year also. But if you're not a paid member, then 3 months after your free trial is over, you will be charged if your AUM is over 5 lakhs. There's a question from Setu saying, if we wish to manage, we wish that you manage our portfolio, is that possible?
Not at this time. We have our hands full with developing out the platform, but there are some internal discussions about whether we offer a more hands-on approach for people down the line, because we recognize that like not everyone has the inclination to spend a lot of time on finance, right? And we think that this platform reduces the amount of time that you need to spend on it to have a great portfolio, but there still may be people that don't, that want someone else to make the decisions for them. So we're at very early stage discussions about whether we want to do that, but whether
step in here for a minute.
Yes.
Okay, so there's one question which I think NJ asked, saying how can we utilize those platforms' knowledge to invest, right? So I don't think we address this fully clearly, but there is for absolutely people who are very new to mutual fund investing, they've never invested, there is a getting started page, which tells them that maybe you just want to start with your long-term money, small, jump into the shallow end of the pool, don't go into the deep end, and invest in just one equity index fund to learn. And then when you get more comfortable, you can, do more, etc. But the amazing thing is that, say, if you had invested in one equity index fund, say these S&P Sensex fund, okay, then you would have earned a return over 5 years of 13%, which actually is not shabby at all. So you don't have to be very complicated. Okay, so that's one. The second question on whether we will be do management of portfolios and all, that's something that I'm looking into, because I manage my own portfolio, and we are registered investment advisors, etc. But we are still far away from deciding how we'll do it. And even if we do it, we probably do it for a very limited set of people who have large portfolios to start with. And then maybe we learn from them and try and lower the fees and build tools so that more and more people, have the tools to manage portfolios, like saying, what do I do once I retire? And can one project one's wealth till the age of 90 and so on and so forth. So there aren't those tools which are available currently, but over time we might do that.
I think given that there are no more questions, we can end this call. Sorry. There is one question that came up. Are any brokers using Bharosa for their clients?
We wish that were the case. And this is something I want to explore, because I think it would be a fantastic way for honest advisors to differentiate themselves by kind of offering their customers advice through this, right? So it is something I want to explore, but as of now, no.
All right, so thank you, everyone. I'm going to stop the recording. Thank you so much for